if Bitcoin treasury companies are kind of slowing down, because I think, the price has been supported a lot by many of these corporates buying a lot of Bitcoin. I mean, think about strategies and a cascade of them that just follows, not just in the US, but we have seen basically globally public listed company buying a lot of Bitcoin. And that obviously helped the price to sustain. So now as we enter 2026 and there might be less buying power from these corporates, there will be something else to watch out, and hopefully we can find buying power somewhere else.
But I think they still have sizable assets really, and it can still be monetized, but they have to behave more like an asset manager, where you say, well, let's say I have $1 billion of Bitcoin, what can I do with it? It's not that I can make returns from issuing shares at inflated prices, but I probably can sell calls against it. I can trade the basis against perp futures and everything. If I have like a little market view here and there, I can probably generate 10-15% with a stack of, let's say, $1 billion of Bitcoin. And I think that's a pretty good value proposition, right? Because suddenly if you can show you can generate this yield, it's very attractive, I think, from an investor perspective, saying, okay, I invest in this company and maybe I'm not too concerned about the Bitcoin price because they're hedging it, they're making money of it through options or other ways. That's something, an idea we put forward like 2 months ago.
Welcome back to the Financial Fox show with me, Steffi, and joining me today is Markus Thielen, CEO and Head of Research at 10x Research. So where are we in the crypto market? That's the main question that I'm going to ask Markus today, to see if we can help other investors to kind of understand the dynamics they are playing right now, and maybe not really anticipate market moves, but kind of analyze them a little bit more, so that maybe can be inspiring for many people to go and do more research. Because remember that crypto is very risky, like any investment is, and financial markets are very volatile, and crypto is more. So what you need to do research. And I'm very glad to actually have Markus on the show, because he is actually offering research as a service for institutions. And we are not just talking about institutions right now, because there are many retail investors, they are also playing the crypto game. Just a couple of things before I invite Markus on the show. So first of all, if you are watching our content, please take a second to just subscribe to our channels or follow us on X, LinkedIn and Instagram. Remember that your support is so crucial to grow the channel, so we can educate more people about crypto. Education is so important and I love doing it, so help me to do it better and increase my voice so I can reach more people. Finally, the show is supported by Hive Digital Technologies, a Nasdaq-listed Bitcoin miner and AI data center operators. Hive is one of the most interesting companies at the intersection of energy, compute, and digital infrastructure, and they are a long-standing partner of the Financial Fox channel. So if you don't know much about Hive, I suggest you go and check out hivedigitaltechnologies.com. They also have a subsidiary that specifically deal with AI compute, and they are offering all different kind of solutions. So you can go and check out also buzzhpc.ai to learn more about the AI solutions. And remember, the Bitcoin miners are a really interesting industry if you are looking into the AI kind of space. They are kind of the pioneers. So definitely worth and check out Hive Digital Technologies. Now let's get into my interview with Markus. Hey Markus, how are you doing?
Doing very well. Thanks for having me. Glad to be here.
It's brilliant to have you on the show, Markus. Thank you so much for coming. And there is a lot really to unpack. And myself as an investor, as somebody that has been in the space for over 10 years now, you kind of like look at the market moves and you have all these questions, should you look at the chart? Should you think about a cycle coming back, or what are actually the breakouts and the things that are changing that show how the crypto industry is maturing. So there are lots of questions that I have for you, and I'm sure that many of my listeners as well. So are you ready?
Yeah, sure. Let's go.
Okay, brilliant. Actually, first of all, tell us about what do you do?
Yeah, so I'm the founder and head of research at 10x Research, and we provide digital asset research for institutions, for traders. We are very data-based, so we look at the real data, the real cycles, the market structure. And we really look at what's really driving the Bitcoin and the crypto market overall. We're not living on narratives or on hype. We're really trying to provide, actionable ideas really with our research. And I think that's what we're really known for. And we have called the cycles so far quite well, but, it can always evolve.
Brilliant. That's exactly all I wanted to, you to say for all our listeners. They haven't watched the previous interview that we did with you. I think was over a year ago. Now, right, let's talk about cycles. I don't want to hear any narratives. I don't want to hear any hype. I don't want to hear any kind of like, there are some people now, they are so obsessed with quantum and they are trying to find ways to kind of justify why the price is going down. Tell us, based on your research, where you think we are in this crypto cycle.
So when we take actually a step back, so we actually called the low on October 28, 2022. So we really called the low and we predicted it really well based on cycle analysis. Actually, in July, early July 2023, we came up with a price target for this bull market basically at 125,000. So of course the high was so far 126,000. And of course we also over time changed a little bit our view that we think, okay, maybe the cycle is going to extend, because it all depends really on how much money is really coming into the cycle. And that's why it's very important actually to focus on the data. But simply based on the cycle analysis, it was, we were able to predict the low sort of, area, but also the high area. And I think when we look where we are now, everybody, of course, just like last cycle, you might recall, you have been a long time in crypto. Last cycle, it was the same. In November 2021, a lot of people were saying, the 4-year cycle is dead and we're going to, Ethereum is going to go to 10,000, Bitcoin is going to go to 100 or, 1,000 or higher. And it's the same kind of like argument we have heard actually the last couple of weeks. But I think the rational decision was really to really monitor very closely the flows, if the buying is outweighing the selling, because there are always people selling. And I think that's something that we really discovered and really have been really ahead of since really, actually end of June this year. We noticed that there was a balance between the OG sellers versus some of the newer, the younger whales buying really. And the market was in a balance. And that's kind of what we recommended to our subscribers, really, okay, the market is going to be range bound, maybe, sell some volatility, sell some upside calls, sell some downside puts. But as we got closer into October, we noticed actually that suddenly these younger whales that were, used to be buying, they were actually selling. So the market went really from a balance into an imbalance. And that's why we dropped off sharply. Of course, we can look back now and say, yeah, this was because of some auto deleveraging on Binance, some stablecoin mismatch that caused liquidation triggers on October 10th. How a lot of the bulls trying to justify it. But the big argument, the big story, the big narrative was actually that the people that used to be buying all year were suddenly overexposed in the market and they actually turned into sellers. And the trigger here was the October 29th FOMC meeting, where basically Powell indicated, well, there might not be endless rate cuts. We might be pausing relatively soon. And I think that's when some of these, whales, these younger whales actually stopped buying. And we have seen this, for example, that the Bitcoin ETFs around $23 billion of net inflows year to date. But since that FOMC meeting, they actually have sold net 5 billion. And when you compare this then, for example, to other, real liquidity measures like futures open interest or some other measures, those positions were all kind of like unwound really when sort of like Bitcoin dropped back into sort of like the mid 90,000s versus the ETFs are like massively long. And I think right now it's very difficult to justify, because when you look at the top 30 US ETFs, they have all seen inflows because everything is up, from all risk assets, the gold ETF, of course the S&P. ETF. The only thing that is not up in terms of price is Bitcoin, but it has seen massive inflows. And of course, if you are like an institutional investor and you just put some, money into Bitcoin and you are down, I think it's a very difficult narrative for those institutions. And that's why we're making the argument that basically there's going to be some institutional selling into year end, basically, because people have to adjust their positions. They don't want to look like super long Bitcoin while Bitcoin is down and everything is up. And I think that's kind of like where it's a little bit, when you look at from the flow perspective, we look at the market structure, but then you actually understand a little bit how institutional flows work and positioning. And I think that's why we have been in this sort of like, realizing losses to, offsetting losses that we are seeing. And I think that's why we had this sell-off into this year end, basically now into Christmas.
So have we done with it?
So great question. I mean, let's say you are an institutional investor and you really, think I have raised some valid points here. I mean, the question really is, when do you stop selling, right? When does Steffi stop selling, right? Because she's working at this big hedge fund. Well, she just booked her ski trip, right? She's off on the slope. She's not going to trade a lot. So she has already done most of her selling. So I would argue we are actually pretty close to sort of like this peak selling from the ETFs, right? Yes, Powell has been a little bit more dovish on December 10th FOMC meeting, but the selling probably had to continue up until probably Friday. I would assume last Friday, because we had, I think what was it, the December 19th, the triple witching, as it's called, right? When the futures expire, the options expire, when there's a lot of liquidity. But of course, then we're coming into the Christmas period, in the Christmas week, where, a lot of traders are off, they're on their holidays, liquidity is not great anymore. So not a lot of stuff is going to happen. But I would argue that we're probably done with most of the selling. It doesn't mean that we're going to go up, but I would assume we are probably a little bit more range bound here. And we see this already for example, from the option market. So the option market was actually quite bearish since August already. So since August, we have seen that the demand for puts was much higher than the demand for calls. And that actually really peaked up until sort of like a week or two ago. And it has slowly really, come back now, where, yes, people are still positioned with puts, that they might expect some downside, but no longer as aggressive as a week or two ago. So we're seeing this unwinding of the bearishness, because people say, if you decide, for example, in September or October to sell some of your positions, well, you don't want to just just wait what the market is doing. You probably say, well, let me sell some futures against it, or let me buy some puts as a protection. So if the market goes down, I'm, making some money on the puts at least. And I think that's what we have seen, where people slowly have sold their ETF positions, but at the same time, their put long positions have been, in the money, and they have been unwound, both at the same time now. And I think we are sort of in this period where there's not a lot of great catalyst, right? We know, of course, retail is active, maybe during Christmas, but can they really push the price up a lot from here? I doubt it. I think we're going to wait until early January and then we see what the real flows are. But the main part of the selling, the tax harvesting selling, where we offset, losing positions in Bitcoin with winning positions in, let's say, Nvidia or Nasdaq or somewhere else, or gold, for example, that's probably behind us. And so it's sort of a quieter liquidity environment here. But I think when we're going into January, then we see how much money is coming into the market again.
That's interesting. So basically we should have a peaceful Christmas. Everybody just go off, ski, don't worry, nothing is going to happen. And see you in January. Now, you talk about being the money inflow, being kind of the main driver of the price of Bitcoin. Is that the main metrics that you're looking at, or is there anything else that, when people are looking, or investors are looking at the price of Bitcoin and, as a cascade, all the crypto or the other digital assets should be taken into consideration as another variable to add to this complex matrix when we are evaluating or predicting the markets?
Well, that's exactly sort of what we're trying, to provide for our subscribers, where we look at everything from the macro data that's important to the market structure, volumes, liquidity. We know, for example, if volume's going up, that's usually bullish. If volume's going down, that's usually bearish. Very simple. Also, we know with the funding rates, if the funding rate's going up, That's usually a good sign up until, of course, they go parabolic. That's usually then a sign where we're going to correct. But for example, we can actually overlay also then the funding rates with retail volumes, for example, in markets like Korea. There we can see if really the retail has been active or not. And that I think really is a clear sign also for the funding rates. And I think the funding rates are actually correlated with a lot of the Bitcoin inflows. So I think a lot of the Bitcoin inflows are actually arbitrage positions where a hedge fund goes long the ETF but shorts the future. And, even if the spread is relatively small, it's a guaranteed spread. It's a guaranteed money, basically, pretty much. And the market is really liquid, and I think that's really key. It's an uncorrelated return. I think that's how institutions have looked at it, and I think there's a lot of misunderstanding. Who is really buying these ETFs? Of course, the crypto Twitter always cheers that Saudi Arabia or whatever sovereign wealth fund bought $100 million, which is sort of like really nothing for them, right? It doesn't really move the needle. It's not really like a massive bullish view on Bitcoin versus, these 100 to 200 billion that we're trading every day in the crypto markets. So I think what investors really, need to look at, and I think it really depends also on your time horizon. So for the faster traders, of course, they look a lot of the market structure, how is the market positioned, especially around these big events, as I was saying, if there's a lot of demand for puts, maybe that's really like a sign how traders are positioned. And if we're then going some of the option expiries, are really people rolling over those positions or closing them out? And that's something, for example, we have seen, a lot around Ethereum during the summer, where, of course, we know, for example, Bitmine had been like buying, in September, October, even in November some, but the derivatives market actually started to turn more or less bearish end of August already on Ethereum. So, and I think that's when sort of like, the support went away because a lot of people just took profit and it was just one big buyer in the market. So it really depends. And then the other factor, for example, what we kind of like analyzed is when you just look at the 21 week moving average, which is sort of like the 147-day moving average, which has tended to work really well. So if you would have just been long Bitcoin when Bitcoin is above this moving average, or neutral or out of the market, or short when it's below, you actually would have done really well because you would have protected your profits, not only in the last bear market in 2021 when it started, but you also would have been out of the market, earlier this year when we had this whole tariff debacle, when Bitcoin had actually sharp correction. You'd have been out of the market last summer, and you would have been out of the market really since end of October. And that's something, an indicator we use. It's very simple for it. Everybody can like monitor. It takes probably only like 5 minutes to compute every week and then make a decision out of it. But what we also looked is really, for example, like a lot of the on-chain data, and on-chain data that also had turned bearish. So I think what I'm arguing really with is that there's a lot of confirming indicators that we had in October. So it's not just one argument that people are trying to make why we had this correction over the last kind of like 2-3 weeks, the last 10 weeks basically. It's really like a lot of the indicators that we monitor, everything from the macro to market structure to on-chain to simple moving averages, even technicals, they all turned bearish. And I think that's kind of how we analyze. So it really depends, what kind of investor or trader you are. And I think that's how you should set up your indicators and your framework.
So basically what you're saying, we are seeing end of 2021 repeating, but then we went into a bear market for a couple of years. My question would be, you kind of like, I know that all these variables, they change and you're always watching, and maybe, even what you think, then it might change depending on events. But are you saying that 2026 is going to be a bear year? Or what could happen? Or what are the events that you're looking, what you are kind of like, how are you thinking about it?
So of course, when we look back, towards all the previous cycles, we have seen that there's been a bear market in 2014, in 2018, in 2022. And of course, they're all matched in the 4-year cycles. Based on that analysis, you would sort of like get to like a bear market in 2026, which is of course next year. But, a lot of people confuse really the halving cycle, which is, not in those bear markets. It's sort of like a mid-halving slowdown somehow that some people argued. And I think there was always been a misconception what actually drove the Bitcoin bear markets. It's not really the supply, what is, the halving is really about. It's actually about demand. It's when really demand peaked out. There was usually a regulatory event. There was usually, a monetary event. But it's really on the moment when, for example, the regulator stepped in. And we had this, a lot of people are not really aware of, right? They just look, halving because it's simple to explain. But actually, I wrote a book about the, these bear and bull markets and what actually drove it. And for example, the 2013 bull market, which was by far the strongest, was really driven by China. But it was when in December 2013, it was rumored that the PBOC would actually prevent companies, especially crypto companies, to really have access to the banking system. And then in January 2014, the PBOC warned all the commercial banks to deal no longer with crypto companies. So basically, on-ramp was not possible in China. Back then, 90% of all the Bitcoin trading was happening in China. They really took over. And of course, that's when the market crashed. And I think when we look back in 2017, when Bitcoin peaked in December 2017, which was, of course, part because the CME allowed Bitcoin futures, they approved Bitcoin futures, so there was a massive ramp up into that moment. But then, of course, it was also that the SEC started to send around some, enforcement actions about the, ICO raising. We had something similar in China, we had something similar in Korea, but it was really suddenly the regulator was actually stepping in, saying this is enough, this is an unregulated securities offering, this is not allowed. And I think that's when sort of like the market started to collapse. And then we had the peak in November 2021, which was basically based on that the Fed would hike interest rates very soon, the Fed would turn hawkish. We came out of a near zero, interest rate policy after the COVID area. And that's kind of like, last cycle was all about DeFi, was all about arbitraging the TradFi markets where interest rates were near zero. We had, these nice guys from, 3 Hours Capital, from Alameda, who were really paying up for, leveraged positions. So there was a lot of demand where a lot of, high yields were harvested there. It was really the DeFi yield harvesting summer period. And of course, now we are here at this moment where, well, there's no regulatory overhang right now because everything is sort of like allowed. So it can be probably, and we wrote a little report about this, what could really stop this bull market. And, yes, the regulatory stuff is really, I think, not an issue. The Fed turning hawkish. Well, they're not turning hawkish anytime soon. But the question is it enough if they just become neutral? And I think we have shown also some of the research we have done. We need the dovish Fed to really bring in ETF inflows. Otherwise, we sort of like bump around and we're not going to do much. And of course, with them sort of like the Fed turning sort of like neutral, that's what I was saying earlier about the October peak when we came down is really when Powell indicated, well, we might not cut, anytime soon. It's sort of like 50-50. And then as you recall, the market pricing went down for no cut, then it went back up when New York Fed Williams came out and said, like, yeah, a cut still is on the table for December. But, the market is not so sure when is the next cut now. The Fed members have only penciled in one rate cut next year and another one, in the 2027. So it's not enough to drive it. And then, of course, the question is, do we run out of buyers? And I think that's kind of the key argument. That's when the argument really switched because one kind of like, part of our analysis is really to analyze how much money is really necessary to drive Bitcoin up, let's say 10%. And that's why we actually, while we have been very bullish, since, as I was saying, since October 2022, we were sort of like one of the most conservatives among the institutional research providers. And for the fact is that now it takes a lot of money to push Bitcoin up. It's no longer before where, $1 million or $2 or $1 billion. We really need a lot of money. And that's why for us in August, we already indicated that Bitcoin might not actually go much higher because we didn't really see the net inflows. And that's, I think, really some really key analysis. I think when you work in TradFi, when you work at one of the big banks, basically you're seeing all these flows from these big hedge funds, these big institutions. But of course, if you're not part of it, you don't see those flows. But in crypto, it's all on chain. So you see actually the actual flow. You just need to have access to the data. You just need to know how to analyze the data. And that's really key. And that was from our perspective. And this has been really dismissed by some people. Bloomberg wrote about a story about our report in July, and people dismissed it. But then, people, claiming it's sort of like a Bitcoin IPO moment, which is of course not the case because there's not much money coming in. And that's really the key argument. If there's not enough money coming in, we just cannot go up. And I think that's really where we are, unfortunately. So we need new triggers. We need a new narrative. And I think that's sort of like where we have these, these roadblocks. But the question is also, why do we have these kind of like 4-year cycles where we tend to go down? And as I was already alluding earlier, we don't think it's a halving. We actually think this has to do potentially with, yes, the regulatory overhang, but also we're entering this year of the US midterm elections. And the US midterm elections are in November every 4 years. Usually the president loses, the president's party loses, a lot of seats. But also the stock market, the S&P tends to go sideways. It doesn't do much really. Most of the bear markets, the equity bear markets have occurred in these, US midterm election years. It's really sort of like, where the president focuses more on campaigning instead of pushing, things through really. And I think Wall Street investors become a little bit, uneasy, a little bit cautious. They don't do much. And that's usually actually the best time really to find the low in this year really that we're going into. For then another 2 to 3 year bull market, the question really is, when do we make the low? The S&P, the stock market tends to make the low around September, if not October, and then in early November are the midterm elections. Bitcoin actually tends to trade a little bit, further down, only to rally then later. But I think it sort of like fits the narrative that at one point maybe the Bitcoin investors, they look at all these policies that Trump has pushed through and think, okay, if, for example, the Republicans lose the House, maybe lose the Senate, can he still push more crypto, non-regulations through? So I think the market could become a little bit concerned about this, and it might not be the number one priority for investors to pump in more money into stocks. And I think that's kind of like where our analysis has led us to.
So I think that's really interesting to see how much buying power that we can get into the new years, especially, if Bitcoin treasury companies are kind of slowing down, because I think, the price has been supported a lot by many of these corporates buying a lot of Bitcoin. I mean, think about strategies and a cascade of them that just follows, not just in the US, but we have seen basically globally public listed company buying a lot of Bitcoin, and that obviously helped the price to sustain. So now as we enter 2026 and there might be less buying power from these corporates, there will be something else to watch out, and hopefully we can find buying power somewhere else. But what do you think about these Bitcoin treasury companies buying digital assets, buying Bitcoin, and what we should expect from them now going forward?
I think we might still be in sort of like a trading environment going into next year. So it doesn't mean that the market has to go down a lot, but I think we can have these trading ranges of like 10-15% up and then 10% down. And I think there can still be money to be made in catching these waves. And how are these digital asset companies, how should they perform? How should they act? I think in the past they were just really focusing on arbitraging, the net asset value premium and issuing shares that inflated prices, and really were a lot of investors that bought really sort of like got really a bad deal. But I think they still have, sizable assets really, and it can still be monetized, but they have to behave more like an asset manager where you say, well, let's say I have $1 billion of Bitcoin. What can I do with it? It's not that I can make returns from issuing shares at inflated prices, but I probably can, sell calls against it. I can, trade the basis against, perp futures and everything. If I have like a little market view here and there, I can probably generate, 10-15% with a stack of, let's say, $1 billion of Bitcoin. And I think that's a pretty good value proposition, right? Because suddenly if you can show you can generate this yield, it's very attractive, I think, from an investor perspective, saying, okay, I invest in this company. And maybe I'm not too concerned about the Bitcoin price because they're hedging it, they're making money of it through options or other ways. That's something, an idea we put forward 2 months ago, and we were really ahead of, when MicroStrategy was trading at 400, we're really pushing it to various reports that this should be, much lower, as a, from a value proposition, it was just overvalued at the level. But I do think that I think next year it will really be the point for differentiation for those companies. If they can show that they can make, 10%, 15% return, they're not going to be these dinosaurs that a lot of people are saying that's going to happen to the DATs. Of course, when you sit there and just wait until your share price gets, overvalued again, not a lot of stuff is going to happen. So you really need to have this asset / hedge fund manager attitude really to generate the yield in the bear market, or in a market where sort of like is a less retail exuberance. And I think that's really the focus. I do think the worry is more probably with the next halving, because if the reward's going to be cut again and Bitcoin is not as high as people are projecting. You might recall, last cycle, everybody was talking about the stock to flow model, but, it broke down last cycle. That's why nobody talks about it anymore. And I think it's probably very similar with, this is M2, a global money supply model that tended to work for 18 months. Then it broke down and now nobody talks about it. So it's a real liquidity. It's a real, for example, the real money that we can measure on chain that's coming into the market. And we can analyze how much money has come in, for example, last year or the years before and this year. And then we can project how much the price really goes up. And I think that is really key. That's really to monitor and to understand if there's outflow or not. But that's kind of like for me really the key going into next year. And that was for us really also to indicate, how high Bitcoin can really go this year and what's really realistic in terms of, flows. And I think that's what's all really about.
Brilliant. Markus, thank you so much for coming on the show. It was really useful to hear your thinking behind, the events, your views. Obviously, we shall see how January starts. Obviously, we are all proponent of innovation in digital assets, Bitcoin, as assets that give ownership. I mean, we want to think positive. We need to think positive. So 2026 might not be the year that we expect it to be, but there are many more years ahead. And depending if you are long term or you are more of a trader, then you can put your bets, you can decide your investment. Remember, on this channel we don't give any financial advice. Always do your own research. Markus has got some really great material that you can check out. We are going to put all the links in the description of the video. And happy Christmas, and I wish you a great new year. I will definitely have you back to discuss more. Thank you, Markus.
Thanks for having me, and Merry Christmas to you too.